Porter. Allen, what's going on, man? How are you?
Well, Neil, it's great to be back after being sick for a couple of weeks, and it's nice to be able to feel well.
Absolutely. And today's title is Why is Your Money Locked Up? What do you mean by this?
Well, Neil, I want to, you hear me talking about the 401k all the time, and think about it. The money that you have in your 401k is locked up. It's the government controls everything. You can't take that money out till 59 and a half, and if you do, it's a 10% penalty. Now, there's ways to do that, but you have to go through so much stuff just to get it done, and you don't have any access to it. When I talk about retirement plans, I want access anytime I want. I want to work while I'm still alive and not only when I'm dead too, but give me so many benefits. But the thing is, Neil, people don't understand a stock portfolio in a 401k only compounds the risk in retirement. Where my new book is called A Time for a New Retirement Plan, Tax Free. I go through many things in there, but there's a better solution than the 401k because we've been inundated by the propaganda of Wall Street and also the fee-based advisors. That's the only way to set up your retirement is by a 401k. And Ted Binion, the father of the 401k, even I've got him on video. It's a disaster and needs to be replaced. But people don't know this. Like I said, they've been fed all this crap as far as I'm concerned by Wall Street. The people who make money off these 401ks is Wall Street and your fee-based advisors, as far as I'm concerned. Because remember, they make money on that money that you have in your account, whether you make money or not.
I can tell you what you mean. Alan, can you tell me what you mean by being locked up? And I know you have a better solution than a 401k.
Well, I kind of explained the locked up portion of it, but here's the thing, Neil. What I want to do is I want to educate people to think outside the box, conventional financial planning. I mean, there's many ways to save for retirement. And I want everybody to have, I'm not against a stock portfolio. I want people to be diversified, but you can't be diversified in a stock portfolio because the stock market goes down, it goes down. It goes up, it goes up. But people don't understand a 50% loss in the stock market will take you 100% gain just to get back to even. And what if you happen to retire in 2000 when the market had 3 straight years that the market went down? You're going to be out of money probably in the fifth to ninth year. It's called sequence of returns risk. I want to educate people about that. But there's so many other things that my book, it doesn't go into a deep explanation, but it gives the highlights to people.
Alan, you tell me about you have another book coming out and you can give me some of those details?
Yeah, exactly. My book, like I said, is the Time for a New Retirement Plan, Tax Free. And I've got it broken down. I'll just come over a little bit over the chapters, but the dedication of this goes to my son Todd, who's been disabled for over 16 years, 100%, 17 years now with no cure. His wife Lynn, who died at age 39 of pancreatic cancer, that got me to investigate and study life insurance products. As it had not been for her terminal illness rider, her life insurance policy that give them hundreds of thousands of dollars completely tax free, which I knew nothing about. My son would be bankrupt, and it took a huge financial strain off of me. And that's when I started doing this. But dedicated to her and also to my daughter, Nicole, who recovered from breast cancer. We didn't think she was going to make it, but she did. Last year, she was 10 years cancer free. But she's also got Graves' disease and has developed, it's called TED, thyroid eye condition. And it's terrible. They got one treatment for it right now. It's called Tripeza. Very expensive. The first one was 32,000. The last one she got was in the May of 2023. It was almost $250,000. It was 8 transfusions. But now the thyroid eye diseases came back. And in January of 2024, she went to the doctor. The doctor told her, there's nothing we can do until you go blind and possibly we can operate. Well, what a prognosis. Tried to get her into Duke, didn't qualify because she took the Tripeza. They did get her into the Mayo Clinic in Rochester, and she came back a couple months ago up there for 4 days for consultations and testing, but there's really nothing they can do. They got a new drug out there, but it's not for this thyroid eye disease, and it's even more expensive than what the Tripeza was, and it's not covered by insurance. So we're just praying something can be done for them. But this is what got me to do what I do today. I never thought I'd be doing it as a financial planner. And my first life, I mean, my first chapter is when life changes everything. And I just told you about my daughter-in-law, Lynn, dying at age 39. That changed everything for me. The truth about traditional retirement programs, they're outdated. The 401k is a disaster, even by Ted Binion, who invented the 401k, needs to be replaced. And understanding chapter 2 is understanding the real risk in retirement. Now, Neil, I've gone over this before, but the real risk in retirement, sequence returns risk, the number one fear in retirement, running out of money before you run out of life, longevity risk, tax risk, government risk, protecting you from the taxation of Social Security, the means testing for Medicare Part B, which will be in the thousands per year if you don't know how to eliminate that risk. I mean, there's many more. I can recall 18 right off the top of my head that my retirement plan will mitigate or get rid of these risks, where a stock portfolio, a bond portfolio, real estate, money market funds, CDs, cash accounts will only compound, and people aren't prepared for it. You know, the tax-free retirement solution is building the right, properly constructed, not whether it's a whole life or index universal life insurance policy. But the other thing too is to turn things into a Roth. Now, you don't have to make everything in your stock portfolio Roth. There's a certain amount of money that can be for a standard deduction. And I think standard deduction now for a senior over 65, I'm not sure, I think it's over $31,000. So that means you can still have so much money in a stock account or a 401k or an IRA that you can take out, and it'll be tax-free because of your standard deduction, and will not affect the taxation of Social Security or the means testing for Medicare Part B. But another big thing I teach in that book is becoming your own bank. Now, Neil, we've gone over this before, and people don't know anything about effective interest cost. And like this one guy, he had a 2.75% interest rate, but his effective interest cost was over 49.76%. And, you know, I educated him on why that was. And he had almost $461,000 in debt. I asked him how long did it take to pay that debt off. He said 20 some years or paying extra on the mortgage. Because, Neil, that's what most people do. I said, you use our program and a tax-free bucket of money and a whole life insurance policy, and in 10 years, we're going to have you completely debt-free. There's going to be over $130,000 in a tax-free bucket of money that you become your own bank. You'll never have to go to the bank, borrow money for a car. And I just bought one. I don't even have to pay it back if I don't want to. But my cash value continues to compound because it goes as a lien against my death benefit. But the other thing too, it saved this guy over $73,000 in interest. And there's a $400,000 death benefit to protect his family in case something happens. Now I told him, I said, listen, you were completely debt free at 52. You got $130,000 in that cash value account. You don't put any more money in this policy. It's paid for. And by the age of 65, he'll have over $250,000 in that life insurance policy and cash value that he can use to supplement his income in retirement. Like I said, that does not affect the taxation of Social Security or the means testing for Medicare Part B, protected from lawsuits, liens, and judgments, eliminates or mitigates the risk in retirement, and the list goes on. Here's another big one. This is chapter 5, long-term care. Neil, you and I have gone over this many, many times. 70% of the people in America are going to need long-term care at some point in their life. 40%, to include my son, are between the ages of 18 and 64 that are long-term care right now. And people have no idea about the cost. It costs right now between $50,000 to $200,000 a year, and it goes up by 6%. And if you're not prepared for it, it will ruin your retirement. It will destroy the caregiver, because there's a thing called, I think it's a Medicaid spend down. And if you don't structure your assets right, they're going to use all your money, all your assets to pay for the person in long-term care, and your spouse is going to be left with something like one house, one car, and approximately $135,000 in cash. I don't care if you had $2 or $3 million. But I put together a step-by-step procedure. I educate people on what's out there. It just goes on and on. And even the person that's helping me get this book published, she says, Alan, I love your book. I read it. All the people in my office want to read it too. I can't wait till you get you do your final editing and get this out, because people don't know this stuff. And like I said, I hope we'll have it finished by the end of this month, and it will be on Amazon for sale. But if you want to contact me about any of this, give me a call at 910-551-1046. You can always go to my website. I have a plethora of information there. That's strategicwealthstrategies.com, or email me at any time at strategicwealth, the number 0, at gmail.com. Now, Neil, understand, I don't charge a fee for my consultations. And sometimes they'll go on for 2 or 3 days. It'll be an hour, sometimes 3 hours. I just want to educate people out there, because they need to think, like I've said before, time and time again, they need to think outside the box of conventional financial planning.
All right. That was the Strategic Wealth Strategy Podcast, guys. Take care.